Good afternoon, good evening, everyone. My name is Abdulaziz Taufik, so I will be the trainer. I'll continue from where our previous trainer stopped, which is Integrity Diamond. And let me appreciate Mr. Jagmola Fatai for the privilege. So I'll continue from technical analysis, right? So although we have a lot of training here to treat, that is why I need to know where we stopped in our training. I think we have treated forex orders type, which is mass market execution and pending orders. How to enter markets with pending orders and market execution, right? So where we use buy limit, sell limit, buy stop, sell stop. I think we all have idea on that. So in technical analysis is just a type of analysis that we use indicators. Is the use of indicators to identify where exactly we are going to enter our market and where exactly we are going to close that particular position. So that is what all about technical analysis. So now we will touch many aspects of technical analysis. In short, this training is much more on technical analysis because we have three types of analysis. We have the technical, we have fundamental analysis, and we also have sentimental analysis. But now, all our training so far, it is based on technical analysis. So whenever we want to move to any other analysis, so you'll be aware. But all the training we'll be doing now will be based on technical analysis. So for today, let's we all know how to backtest trade, right? How to backtest trade to check what have happened before. Because in forex markets, we normally see some things that will happen all over again, that will repeat itself in future. Anything that have happened in past will surely repeat itself in future. So that is why we will be making use of support and resistance, which we have been taught about that. I believe we have been taught about support and resistance, how to use support and resistance to enter and exit trade. So you check, that is why it is very important to know how to backtest any strategy. When you come up with any strategy in forex market, it is very important to know how to backtest that strategy to see how far the strategy is working, to know how much win and how many lose that strategy will give. So, but today, let us look at some things on essential chart knowledge, which we'll be talking about margin trading. I hope we will not treat margin trading before, or we have.
Hello, sir.
That. Yes.
I don't know if I'm the only one or about the backtesting of strategy stuff. I don't think we've been taught anything on that. How to backtest strategy.
On backtesting, right? Okay, I can still start from backtesting. How to backtest a certain strategy, how to backtest a trade, what have happened before. We want to backtest it to see if it repeats itself. So before you can backtest, we have to have a particular strategy we have already. So that is the strategy we are going to backtest. let us start from the backtesting stuff. So in forex markets, we have many indicators which we are going to treat later on as this training is going. So, but now let us just add a random indicators. Our previous trainer have explained to us how to use MT4. So if I want to take any indicators, so I'll come here under inserts, then indicators. We have trend indicator, we also have oscillators. So let us use moving average. I want to use moving average here. So let me use moving average, 200 moving average. Sorry. Indicators trend. So I want to use 200 moving average. Let me use it. We all know how to select indicators, right? So let's assume I want to use 200 moving average. And let me just select any oscillator here. Let me use stochastic oscillators. Yeah. So let's assume this is the only strategy I can use to enter a trade. And I want to use this particular strategy. So this is what I will do. And this is how to backtest if this strategy is actually working or not. So the rules of this strategy now is that in my moving average, 200 moving average, anytime the 200 moving average is above the charts, like something here now is above the markets, so I should not go for buy. I can only go for sell at this point. At this point, I can only go for sell. Even though it gives me buy signal, I will not go for buy until it gives me sell signal. And anytime this stochastic oscillator is above this 80, because this is my 20 line and this is my 80 line. When it is above 80, which means it is overbought, and the only opportunity I'll be looking for is to sell this particular market. So when it is below 20, it is oversold, and the only opportunity I'll be looking for at this moment, it is to buy. But my 200 moving average here is telling me that I cannot go for buy since the 200 moving average is above the market. I hope you understand this, my particular strategy I want to use to backtest.
Yes, sir.
Good. So let me now move back to see what have happened in the past, if this strategy is actually working or not. As I said before, technical analysis is a kind of analysis that we use indicators to analyze markets. Analyze our markets. So let me stop from here. So at this moment now, this is my stochastic. So this is my 200 moving average. It is above, my 200 moving average is below the market, which means the only opportunity I'll be looking at here is to go for buy. So now this I've confirmed that I can only go for buy. Then I'll wait for my stochastic to also give me a buy signal here. As you can see, it goes here and it tells me the markets have already oversold here. So the only opportunity I'll be going for is to buy this particular market. So at this point here, I can enter my trade, which means at this point, let me draw a vertical line for you to see. At this point here, this my strategy tell me that I can now enter this market and I can buy. So as you can see now, it goes up like this, it goes up like this to here. From here to here now. From here to here now, I should be able to catch some pip. So it is 64 pip. From here to here, I'll catch 64 pip. So, and when it reached here, it tells me that it is already overbought. So any moment from here, I should exit the trade. Any moment from here. Because any moment from now, the market will start reversing. And this is what happens here. It trends here. And from here now, it starts reversing gradually. So which means this my strategy actually works here. Let's look at another, what happens in at this point, the market is ranging, which means there is no signal. Anytime you are using a particular strategy and you see something like this, when the market is ranging, which means there is no entry. Because you can only make a good profit out of the market when the market is trending, something like this. When the market is trending, you can only make money out of the market when market is trending, not ranging like this. So at this moment, the market is ranging, no entry here, no entry here. But now, can you see from here to here now, the market is ranging, and then boom, it comes down here. So let me check what happens here. What happens here? Now, this is another example. The market is already oversold at this moment. The market is already oversold here. But in my other strategy here, which is for the 200 moving average, 200 moving average tell me I can only sell because it is above the market. I can only sell. And this one tell me now I can buy. So I will wait. I will not take any trade here. I will have to wait for the two confirmation to complete. For the two confirmation to complete before I can enter any trade. So at this moment, I will not enter. One is correct and the other one is not correct. I will not enter any trade. I will have to wait for the two confirmation to complete. I think we understand what I'm explaining. If you have any question, you can just let me know so I can repeat myself. So at this moment, the market is ranging. At this point here, yes, you can use this as a good example. At this point here, the market is already overbought, and the market here is under the 200 moving average, and here is already overbought. The only opportunity I'll be looking at here is to sell this particular market. So the moment I see it here, I see this signal here at this point. At this point here, let me draw an horizontal line. At this point here, that tell me the market have already been oversold. So I can now sell this particular market. I can now enter my trade here at this moment. I can enter my sell trade. I can enter my sell trade. And from there, I should be able to catch some pips as well. So let's look at where the market give us a loose. Let's see where the market gives us a losing trade. You can use this as an example here at this point. Market range from here go up from here and it touches here, then it comes back. It is already overbought at this point. It's already overbought. So now it ranged back downward. We will be thinking the market will reach here. This is a support. This is another support at this place. So we'll be thinking that the market will actually come down here before it reverse. We'll be thinking the market will come here before it reverse. So now we can set our take profit at this place, then set our stop loss at this point. Then we can enter our trade at this place. The markets are the strategy after me to buy, to sell at this moment, and the 200 moving average is above the market at this point. So without a doubt, I will enter this trade right from this moment, from this place, exactly this point. I will enter this market. And when I enter this particular market, it's range. It comes down a little bit, then it goes back up to hit my stop loss. That is why they tell you it is when you are using any strategy, there will always be a losing days, and there will always be a losing trade as well. So you can't say you win a particular trade 100%. No market is 100%. No trade is 100%. Nothing like 100% in trading, in forex trading. So this particular strategy here, it is loose. So this is actually how to backtest. The moment you'll be recording your winning trade and your losing trade as well. You'll be recording it. So far, what we have backtest so far, we have 2 win, we have 1 lose. So we'll be recording it. And when the lose or win, you have to have a particular ratio. So when your lose is more than your win streak, your losing streak is more than your winning streak, then it is not a good strategy to use. But you have a winning streak, a winning trade more than a losing trade, then you can go ahead with that strategy. Although it depends on your reward ratio.
Hello, sir.
Yes.
So, with what you've just explained just now, so in real sense, indicators are strategies.
Yes, I'm with you. Indicators. Are you asking?
Yes, sir. I'm asking with what you just explained now. That means indicators, they are strategies, right?
I'm with you. Not really. Indicators, the only thing indicators can tell you, we have many indicators, and we have each indicators have what they want to indicate in the market, what they want to prove to us. Like this moving average now, the 200 moving average I use here is to let me identify a trend. As I said earlier, you can only make profit out of the market when the market is trending. So this 200 moving average can let me know if there is trend in the market or not. And we have many indicators as well we can use to identify trend. We have Bollinger Bands, we have envelopes, we have Ichimoku, we have parabolic SAR, we have standard deviation. Are you with me? So you can't use only indicators to take a trade. You can only combine indicators with different outlook, with different things they want to specify in the market for you. So that is why you see some people will use a single indicator and they will use it differently. They will use it in different forms. So this indicator will not just tell you to buy. This indicator will not just tell you to sell. you have to combine indicators that will tell you different things that happens in the markets. I hope you understand me.
Yes, I understand, sir.
Okay.
Then
That
that,
is the use of indicators. That is the use of indicators. These are stochastic indicators as well. We tell you if the markets have overbought and oversold. When the market is overbought, it will tell you that as very soon there will be a reversal. There can be a reversal any moment from now when the market is overbought. And when the market is oversold, it's telling you that there might be a reversal any moment from now. So when the market is oversold, you'll be getting ready to buy. And when the market is oversold, you'll be getting ready to sell. That is what this will indicate for us. So any strategy you think you can, there's a lot of people that upload strategy on YouTube, telling you to do this, do that. Any strategy you want to use or you want to make use of, you have to make sure you backtest it first. And when you backtest the strategy, you see how many lose does this strategy give me and how many win does this strategy gives me. So that will tell you if the strategy is good to use or not. And some strategy as well goes with the time frame you want to use to trade them. As we know, we have scalper style. We have many style of trading. We have scalpers. We have scalper. We have the trader. We have position trader. So this will determine if you are using this, if you are using any particular strategy, it will tell you, okay, oh, let me use 5 minutes to trade as a scalper. The scalper, let me use 5 minutes to trade. 15 minutes is still for scalper. Get to the market as early as quick as possible and go out as quick as possible. So as a swinger, you can use 30 minutes, you can use 1 hour. The trader, you can use 1 hour, you can use 4 hours, you can use 1 day as a day trader. As a position trader, you can use daily, you can use weekly, you can use monthly. So that is why you have to make sure you know the kind of trader you want to become. So we can keep on. If you have any question based on backtesting, you can just let me know. This is a particular strategy. This is a particular strategy I derive just to show you how to backtest. How to backtest.
all right. Hello, sir.
Yes, sir.
So now that you've taught us how to backtest, I was thinking something.
Okay.
Is there a way that we can backtest automatically with previous history? You know, this we just, if we are backtesting like this, I think it will take some time. Is there a way to do it automatically via past trade history?
That's okay. This thing just happened now. Does this have happened before? Is that not your question? Now automatically it will tell us when that thing happens.
Yes, sir.
Is that your question?
Yes, sir. Is there a tool that can analyze for us? Is we are to say about like for the last 3 months, based on my strategy, like how is it working that it will just analyze it for us automatically and give us the result?
I don't think there is a way. You can only backtest manually. Backtest manually.
All right, sir.
So if you want to see what have happened before, you can just draw a horizontal line, just like this. Just draw a horizontal line, just like this. And when you are backtesting, if you have your horizontal, let me use these supports here now. So if you want to backtest, you can be following through this horizontal line to see if this horizontal line is actually going in line to what have happened here. But there is no way you can backtest automatically. You have to backtest manually. You have to backtest manually. Unless you are going to build a EA for that. I will help you to backtest automatically. But backtasting is manually.
All right, sir.
So if you have any question based on the previous training as well, you can just let me know before I move on to the training I've prepared before. You can just let me know. So initially we want to treat margin. I don't know if that is treated before, margin.
No, sir, it hasn't been treated.
Okay. You have any question based on the MT4 as well? Just let me know. I think today class will just be on revision and recap. Tomorrow we start the normal training. So today we just treat how to backtest a particular strategy. So let me just add something to my backtesting. So now I want to change this 200 moving average. I want to change it. I don't want to use it anymore. So I want to use another strategy now. And I can decide not to use this as well. Let me change this as well. So let me come here and select a trend. Let me use another indicator. So this is Bollinger Band. Bollinger Bands. It is used to identify trends as well. Identify trends and volatility. Bollinger Band is used to identify trends and volatility. So when there is volatility in the market, the spaces here will give you space. Can you see something like this? There is enough of space here between the upper line, the middle line, and this line here. So, but when there is no volatility in the markets, the lower band, this is the lower band. So the lower band and the middle band and the upper band will come together. So like something like this. This indicates that there is no volatility in the market and you shouldn't enter any trade at this point. You can only make profits when there is a lot of space in between the bands here. So I want to use this as well to identify trends and volatility. So let me use another indicator in support of this to make it 2. You can have as many as possible indicators on a chart, but too much indicator will give you a lot of information, and the more information you are having, you'll be missing out an entry, because when a particular indicator tell you to buy, the other one will actually tell you not to buy, so we'll be missing out entry. So for now, I'm using only 2 indicators to, okay, oscillators. Let me use MACD this time around. I want to use MACD. So we have levels here. We have levels. So this is the description. I can add levels. I'll show you the levels. Let me add 20. Let me add another levels. Let me make this one 80. Then add. I hope you can see my screen. Let me reset this. Hello. Hello.
Yes, sir.
Yeah, my
Hello,
network is breaking here. So I want to confirm if you are actually seeing my screen.
Yes, sir. We are seeing your screen.
Your screen is.
All right, sir. So I'm using MACD. I'll come to oscillators here. Let me select MACD. Then these are my levels. Then let me reset. Oh, and take it from scratch. We add 20 here. I can make this one 30. Add. I can make this one 70. And add. Okay. So this is my MACD, and this is my Bollinger Bands here. So if I want to use this, I want to use this strategy now to backtest. So let us use another pair. Let us select another pair. I don't want to focus on only one pair so that you can understand better. Okay, let me add it here. Trend, Bollinger Band. Okay. Oscillators, MACD. Yes. And this one 70. And this one 30. So this is it. So I'll watch this line. Anytime there is space in between my trends here, anytime there is space in between here, anytime there is a left space, it's indicating that there is a lot of volatility in the markets, and there is indicating that there is about to be a trend in the market. So I can go for sell anytime there is a lot of space here. Likewise here as well, is indicating there is about to be a trend in the market. But as the market is ranging here, I can't enter any trade. I can't enter trade here because there is no volatility in the market since the market is ranging, and the space in between the bands is not much. So I won't enter any trade here. So that is it. So in my MACD here, in my MACD, so when there is histogram, this is called histogram. This line here is called histogram. So when there is no histogram here, so it's indicating that the market is ranging here as well. But when we start having a lot of histogram, that this line is getting bigger, which means there is a trend in the market. So here I've given me a buy signal, while here as well it's also giving me a sell. Sorry, here is giving me a sell signal, while here is also giving me a sell signal. So in this type of market, I can sell. Depends on the kind of indicators you are using. Depends. So very soon we'll be treating how to get strategy that we'll be using. But for now, we have not started taking any trade. So we'll be taking any indicators randomly for now, since we have not started taking any trade. So, but any indicators you want to use, You have to first of all know its functions. What does it indicate in the market? What does it indicate? So like something like this. Here we start having histogram here. So anything below this zero, these are zero line. These are zero line of histogram. So anything below this zero line is indicating sell, and anything above this zero line is indicating buy. So we get to know more strategy as the training continues. So based on backtesting, you can let me know if you have any question. By tomorrow, we start our normal training by tomorrow. So based on backtesting, let me know if there is anything you don't understand about backtesting, how to backtest a strategy. The strategy is actually working or not. So let me know. Can we all hear me?
Yes, sir. We can hear you, sir.
Okay. So if you don't have any question based on backtesting, so we can stop the training for today. So by tomorrow, we'll be treating margin. We'll be treating margin by tomorrow, by God's grace. So backtesting is very simple. When you watch any YouTube video, so it's not just you creating accounts, start trading with the strategy. You have to first of all backtest the strategy and see how it works. When you see it is working fine, then that means when you have more winning streaks than losing streaks, then you know the strategy is good. But in strategy as well, there is one thing you have to have: your target, which is the risk-reward ratio. Your risk-reward ratio. Have you treated risk-reward ratio before? Do you know anything about risk-reward ratio?
No, sir.
Yes, sir.
Okay. So let me just tell you what, because that is what you need as well when you want to backtest. You have to have a particular risk-reward ratio you have in mind. So let's assume this is how it works. Let's assume I want to trade and I am willing to risk $100 and earn $200. Okay, let me show you. Let me remove this indicator. So let's assume I want to take a trade here. I set my stop loss here. This is my entry. And I set my take profit at this place here. So if I'm talking, if I want to take this trade now, you have to look how many possibility of risk-reward ratio will this trade will actually give you. So you have to check how much are you willing to lose? How many pips are you willing to lose? So here we have 54 pips here, 54 pips, which means you are about to sacrifice 54 pips in what? To earn what? To earn 158 pips. So in risk-reward ratio, we have it here. Let me write something on the board. So there is something we call 1 to 2. Why is it not inserting? Inserts text. Oh, the color is in white. Let me change the color. So this is what they call risk reward ratio. I will have 1 to 2, which means I want to sacrifice. Let's assume I want to sacrifice $100. I want to risk $100 in this trade from year to year. Let's assume I want to risk $100 to earn $200. This is called 1 to 2 risk reward ratio. I'm about to risk $100 to earn $200. If you are talking about 1 to 3 risk reward ratio, it is all about you risking like this one now. 1 to 3 risk reward ratio is all about you trying to reach $100 to earn $300. If it is 1 to 4 risk reward ratio, you are sacrificing $100 to earn $400. Depends on how much you are trying to risk. If I'm trying to risk $50 a year, so this will be, I'm trying to risk $50 to earn $100. This is 1 to 2 reward ratio. If it is, I'm trying to risk $50 to earn $150, it is 1 to 3 risk reward ratio. So when you are backtesting, you have to know this. You can sometimes you can have like 5 losing trades, 5 losing trade on at a particular time on a row, 5 losing trade on a row, and still yet you will later be in profits. Like someone that is using 1 to 3 risk reward ratio, and you are risking $100 to earn $300. So when you lose 2, when you lose 5 out of this trade now, which means you lose just $500, and you win like 3 trade here, which means you will be winning, you will be in profit of $900. So at the end of the day, you will later be in profit of $400. I hope you understand this, or let me come again. So this is risk reward ratio. When you are trying to risk $50 as 1 to 2 reward ratio, then risking $50, you earn $100, trying to earn $100. If you are risking $100, you are trying to earn $200. When you are risking $200, you are trying to earn $400. When you are risking $500, you are trying to earn $1,000. That is 1 to 2 risk reward ratio. And we also have 1 to 3 risk reward ratio, which means times 3 of the amount you are risking. When you are risking $100, you are trying to earn $300. When you are risking $200, you are trying to earn $900. So this will depend. Your strategy will determine what you are losing and how much you will be targeting in the market. So you having a lot of lose instead of win doesn't say that the strategy is not good. The time depends on the kind of risk reward ratio you are using. So I believe you understand what I'm explaining.
Yes, sir.
If you have any question on that, so you can just let me know as well. So you consider the risk reward ratio when backtesting as well. When backtesting.
All right.
So you can stop the we can end the training now since nobody have any question. But we are just we only have 3 people online. I don't know the reason why the rest, maybe they don't know there is training today. I don't know the reason why the rest are not online. So I'll drop a message on group so to find out what is the reason as well. So I believe we get back to training tomorrow and we continue with margin, how margin works. So I'll stop the recording right now. So we meet tomorrow.
All right. Thank you, sir.
Right. Thank you.